Good evening, ladies and gentlemen. I am Omar Bootsmith, Country Manager and Senior Principal at First Citizens Investment Services Limited, St. Lucia, and I will be your moderator for this evening's panel discussion. I bid a special good evening to our esteemed panel, specially invited guests, and to all the participants who have joined us tonight. Tonight's discussion will be one of a difference as we seek to answer the question, who says I can't be wealthy? I know it's a topic that would have caught the eye of many of you here with us this evening, and our aim is to have a free-flowing, fulfilling, enriching, enthusiastic, and informative dialogue as the theme suggests. As most of you are aware, October marked the 20th anniversary of the Eastern Caribbean Securities Market, and tonight's discussion is our first public education event in a series of events to celebrate the milestone. The theme for the anniversary is celebrating 20 years of facilitating, protecting, and compounding the wealth of ECCU citizens. Our market was launched in 2001 out of a need to give institutions and governments the ability to raise capital required to grow and build our economies, and to give our citizens of the OECS the opportunity to invest their hard-earned money in assets that would generate the sort of returns that would facilitate wealth creation. Tonight, we will cover a number of areas aimed at examining how one can go about planting the seeds necessary to build and grow their wealth in our market, while also looking at some of the advancements that have been made during our 20-year existence and what would be required to adapt going forward. At this stage, I ask that you permit me to introduce our panel. With us tonight is Ms. Alusha Faisal. Ms. Faisal is a financial services professional with 30 years experience in the financial services sector in the ECCU, with more than 15 years in financial regulation and supervision. Ms. Faisal holds a Bachelor of Science degree in Management Studies with first-class honors from the University of the West Indies, a Master in Business Administration from the University of Durham in the United Kingdom, and is a member of the Association of Certified Anti-Money Laundering Specialists and a Certified Anti-Money Laundering Specialist. Alusha is currently employed as the Chief Executive Officer at the Eastern Caribbean Securities Regulatory Commission and currently manages the operations of the ECSRC Secretariat. Welcome, Alusha. Also with us tonight is Mr. Trevor Blake. Trevor E. Blake is the Managing Director of the Eastern Caribbean Securities Exchange and its subsidiary, the Eastern Caribbean Central Securities Depository. He has been the Chief Executive Officer of the group since January 2005 and has been integrally involved in the group from inception. Prior to joining the ECSE Group, Mr. Blake held the position of Director of Financial and Enterprise Development Department of the Eastern Caribbean Central Bank, where he had direct responsibility for the bank's monetary and capital markets development program. This included the establishment of our Eastern Caribbean Securities Market and the Regional Government Securities Market, and the establishment of the ECSE Group of Companies and the ECSRC. Mr. Blake holds an MBA from the University of Nottingham and is qualified as an associate of the UK Chartered Institute of Bankers. I would like to welcome Trevor. Our third panelist is Mrs. Alana Joseph. She's an accountant by training as a CPA and a banker by profession. She holds a distinguished career with the Grenada Cooperative Bank Limited, having worked in almost every department from operations, credit, compliance, finance, and administration through the Managing Director's office, and has participated in multiple critical projects within the bank, most recently holding the role of Executive Manager of Finance for about 4 years. Mrs. Joseph also holds a degree in accounting and an international diploma in governance, risk, and compliance. She's also an associate of the Institute of Canadian Bankers and an anti-money laundering associate. She now heads the bank's wealth management and financial services department. She also holds the Eastern Caribbean Securities Market certification and is the bank's lead principal for its broker-dealer operations. Welcome, Alana. Last but not least is Mr. Cedric Charles. Mr. Charles's experience in the banking and finance industry spans over 20 years. He is a senior manager, investment banking services at the Bank of St. Lucia, responsible for the management of the bank's proprietary as well as non-proprietary portfolios. He is also responsible for the broker-dealer, capital markets, trustee, and custodian functions. His experience includes investment and liquidity analysis, portfolio management and creation, scenario analysis, investment advisory, and product generation. Mr. Charles holds a Bachelor's of Science degree in accounting from the University of the West Indies and a master's degree in finance and financial law from the University of London. Mr. Charles also is a licensed principal from the Eastern Caribbean Securities Regulatory Commission. I bid a welcome to all four of our panelists, and given their CVs and their vast knowledge and experience, tonight's discussion is bound to be very, very, very engaging. So before we get down to business of this evening's, discussion, I will outline the flow of the event. I will engage the panelists in discussion through a series of primary and follow-up questions for a period of 60 minutes. Participants can pose their questions to the panelists during this time in the Q&A section. We ask that you pose them in the Q&A section and not the chat. Your questions will be posed to the panelists during a 30-minute Q&A session, which follows the panel discussion. Following the 60-minute panel discussion, there will be a trivia that all participants will be free to partake in. The link to the trivia will be posted in the chat, and participants will be given 10 minutes to answer 5 short questions all related to the content discussed this evening. Persons who answer all 5 questions correctly will be entered on our virtual winners wheel, where a winner will be randomly selected. The winner of tonight's trivia will win $500 that will go towards an investment in an asset traded on the Eastern Caribbean Securities Market with a broker of their choice. We will announce the winner at the end of tonight's proceedings. So I've said quite a bit. It's now time to get down to business. The words wealth and wealthy are often bandied about for various reasons when describing individuals or particular companies. Reasons sometimes even in a negative connotation. Some of us have goals to become wealthy. Others may believe it's unattainable because our earning capacity and our circumstances may not allow for it, while some of us may actually be more or even less wealthy than we think. My first question tonight is to you, Alana. Alana, I want you to give your interpretation of wealth to our listeners from your perspective as an investment professional.
Okay, good night, everyone. In a simple theoretical definition, personal wealth is really the sum of all that you own. That is, all the assets that you own minus all the liabilities or debts that you have. Wealth is not something that is static. It varies based on circumstances, and the journey to wealth creation is different for everybody. Wealth creation to me is about financial freedom, financial independence. It doesn't mean being the richest person in the world. Instead, it means being comfortable and being prepared for life. It requires discipline. It is about living and growing with purpose, knowing what you want to achieve for yourself and for your family, and how do you get there. It requires a disassociation from some programs we have running on autopilot. For instance, wealth is limited to only a certain class of people. I need a lot of money to, start creating wealth. It may be too complicated, so I just probably should leave that alone, and maybe there's some kind of secret or some kind of catch, or some kind of trick, so I should stay away from investments. That's some of the things that we often cloud our, that cause some fears and anxieties when we speak about wealth. But as I mentioned before, in my opinion, wealth creation is really a mindset. It's a consciousness, a discipline of doing what you can in your current position to improve yourself, to get you where you want to be based on your preferences and your priorities. It's also knowing what you can afford and what you're capable of, not about comparing with social media or with your colleague at work or your friends. It's about managing your own means, spending with purpose. And I believe that wealth creation is really relative to each person and each situation.
Okay, thank you, Alana. I just wanted to find out if you could just briefly tell our listeners what are some of the ways they can measure their wealth. Some of us, like I indicated, we may not be able to value our assets or know exactly what we own or the value of what we have. What are some of the tools you could recommend to do that?
Some of the tools to value your assets. Well, I mean, depending on the assets that you own, there are some measures to come up with the worth of those assets, what they're actually worth on the market. So if, for instance, if it's cash, there's a easily measurable value. If it's property, of course, you have to have a property valuation done to understand the value or the worth of that asset. If it's a vehicle, for instance, you still get a valuation done. If it's shares, it's based on the closing price or the value of the shares are being traded on the markets. Your debt instruments as well. The market provides an avenue for you to value those financial assets, but you may also have real property, as I mentioned before, in terms of land and so forth, land, house, rental properties, and you engage in valuations as well as considering the income earning potential of those assets in your consideration.
Okay, thanks for that. Thanks for that, Alana. Do any of the other panelists want to add anything? All right, I take that.
Yeah, well, Omar, I think that Alana did a fantastic job in articulating the definition of wealth and wealth creation. I think, and she brought perspective into the alignment of your ability to be wealthy with your values and your goals. And I think that that's important for our attendees here to understand that if you want wealth generation, it's important for you to align that goal with your values. And I think she did a great job in putting these two together. So that is what I have to add as it relates to wealth.
Okay, thank you very much, Cedric.
Mr. Moderator, you would allow me. I just wanted to come in here and see that sometimes we sometimes think, and I think Alana alluded to it, that only certain people could or should be wealthy. And I think sometimes even in the socialization, there's almost a sort of sense that, this is not for me, this is for somebody else, it's another group of persons, and not for us. And sometimes even in the things we taught, and sometimes some of it has biblical underpinnings. So it almost seems as though, if you're going to be a good Christian, you shouldn't try to be wealthy. So sayings like it's easier for a camel to pass through an eye of a needle than for a rich man to enter into the gates of heaven. All of these things actually become, almost self-fulfilling. And we, if to the extent that we believe in these things, it sort of prevents us from achieving our full potential. So I want the audience to understand that this is wealth. Everybody has, I think, an obligation to him or herself to try to gain as much wealth as you possibly could, or as much as you need.
And if I may chime in,
sure.
I think Alana also touched on discipline. I think that is something that is critical as well, being able to have a budget and stick to that budget and not go outside of your spending limits. I know a lot of people will say that I'm not making enough money to put aside anything. I am living from paycheck to paycheck, especially now during this COVID crisis. But it's always good to at least put aside the smallest amount that you can, because at the end of the day, it grows.
Yeah, I mean, excellent points from Trevor and Alusha. It really speaks to the fact that generally wealth isn't linear. You have to start small and with discipline, and it's really a battle of attrition for most of us. But once we stay the costs and we believe in the impact of compounding, that creating wealth can be necessary. Sorry, can be achievable. I'm going to move on to
Omar, before you move on, I just wanted, as Mr. Blake made the point, and I spoke of wealth being, your assets. I think the greatest asset that we have are ourselves. We are the ones that are working and generating income. So we also have to, the point that Ms. Faisal make about put aside something for yourself, for you. I mean, because you are your greatest asset. So I think if people probably start thinking of it that way, they probably may have a different approach.
Thanks, Alana. Thanks, guys. All right, so I mean, there was a time in the ECCU not too long ago, in almost all of our territories in the OECS, you could get as high as 7% on a fixed deposit for a year from a bank or a credit union. Folks could retire at 55 and receive a pension from the national insurance scheme, and there would be a large gratuity or defined benefit pension from your employer at retirement. It meant that in those times, one could simply save some money for emergencies and the rest would largely be taken care of. But these times no longer exist and more is clearly required. Making wise investments for your future has become an absolute necessity. Cedric, I want you to explain the fundamental difference between saving and investing and the key differences between financial investments and other types of investments.
Okay, so there are a few critical differences between savings and investing. Savings essentially is putting money aside and essentially putting it on a savings account or a deposit account, and you essentially save it. Investing is, I would put it more like utilizing that passive income to work for you and investing in specific vehicles that can generate wealth through these passive measures. And it's important to clear that distinction. I mean, when you look at now and you mentioned to the 7%, I mean, the minimum savings rate right now is 2%, right? And inflation is, as at the end of this year, is 2.8%. So essentially, it's costing you to save when you really think about it, because inflation is this high.
Right.
So investing, on the other hand, is you taking, and I'm just gonna break it down in the simplest terms. It's taking the money and utilizing it to essentially make that passive income work and work effectively. So I've broken that down. Financial instruments, there are a number of financial instruments in the market. I mean, right now we have equities, we have bonds, we have ETFs, we have alternative structures. Now we have cryptocurrencies, which is, being questioned as whether or not that forms as an asset class. So there are, in the investment space, you have over 500,000 financial instruments, right? So it's vehicles that individuals utilize to grow their wealth, and these are what financial instruments are. Now, when you compare financial instruments to other assets, and I'm making reference to, let's just say, if we're looking at hard assets like property. Now, property is an investment, but it is not a financial instrument. I mean, property, you get appreciation through the price of the property going up. I mean, a financial instrument is valued through market factors. I mean, you have, I don't want to go into the beta of it, but it's maximized through market factors. I mean, when, people have the perception that the price will go up of that instrument, the price goes up, and it creates that avenue to grow. Now, if I go from a historical perspective and I just take into account a number of exchanges, the ECSE, the Jamaica Stock Exchange, the New York Stock Exchange, and you look at historically the performance of a financial instrument vis-a-vis, let's just say, some hard assets. Historically annualized, most of these exchanges realize a return of over 25%. Now, if cumulatively over the years, that's significant. If let's just take, we look at land, for instance, and we look at the value of land, yes, there is appreciation, but it's not as significant as financial assets, as hard assets. Now, there is a difference and a distinction, and that comes with the risk. Now, with a financial instrument, just like with any instrument, you assess it based on the fundamental characteristics of that instrument, and you assess the risk reward, which is critical. And we have to be mindful of that. I hope I'm able to shed some light between the two instruments, Omar. But I think it's important for us to just define the distinction. One, these financial instruments can be utilized. I mean, you could diversify it, in a pool of assets and create diversification to mitigate your risk. But we have to just ensure that we are aware of the distinction between the two. They are both investments, but they are two different type vehicles. So they are both a means to an end, but the roads are different. One road can take one route, the other can take another.
Yeah, and I mean, you made the distinction very well. One of the points I always make is that there is a steadiness of returns with financial investments, but particular types. I mean, especially your debt securities and whatnot. And you did bring up land, and I know traditionally in the OECS we like to quote unquote invest in land, which is like a capital appreciation more or less. We buy, we hold, it increases in value, or we may build on it at some later point. But it's key to understand that it doesn't become an investment until there's a return. Until there's some cash flows or there's some sort of returns, that's when it actually becomes an investment. I just wanted to, speaking on the returns from investment, right? And for the folks on the call, what we're saying is you make an investment in a financial asset, or you make an investment in a hard asset like property or in a business, you will get returns. I want to highlight rather the importance of reinvesting that income. I don't know if anybody on the panel wants to speak briefly on reinvestment, reinvesting your returns, and how important that is to really building wealth.
If I may, just to pick up where Cedric sort of left off, and maybe draw a more sharp distinction between savings and investment.
Sure.
Savings is about securing, so it's about safekeeping. Yeah? It's not investing. You get a fairly small return on it. The banks would give you some interest, but you cannot save yourself wealthy. Yeah, nobody could tell me anybody who has saved themselves wealthy. To create wealth, you must invest. You must put those resources that you have to work for you. So instead of you working for money, your money is working for you. In terms of the reinvestment, there's a thing, I don't want to get too technical about it, but there's a thing called compounding.
Right.
And that is where you get the fastest growth. So you are earning return on return. Yes, if you keep the returns that you earn on whatever you have invested in, that in itself will then provide a return, and you're going to be making money on the money that you've made. And that compounding factor creates wealth a lot quicker than if you just took the return by itself.
Okay, thanks for that, Trevor. So since you have the floor, Trevor, I'm just going to pivot away from investing. I think we've sort of established the fundamental difference between saving and investing, and the need to invest in order to create that wealth we discussed first up. But I want to take our focus to the market for a little bit. And Trevor, as general manager of the ECSE, and having been a part of our market for such a long time, I want you to describe our market infrastructure and the role that different agencies play in bringing it all together. Help our listeners understand how easy it is to invest in our market.
Okay, thank you. That's a big question, but I'll try to. First, in terms of the market infrastructure, at the top we have the Securities Regulatory Commission, which Alusha will speak more about because she is the CEO of that institution. Because that is the apex institution, and that is the entity that is charged in the law, in the Securities Act, to regulate securities business in the entire jurisdiction across the entire Eastern Caribbean. So the commission not only regulates the market, but license the persons who and supervise, oversee the persons that operate in the market. So anybody who is a broker who wants to buy or sell securities on behalf of another person, anybody who is seeking to raise capital in the market, anybody who provides the infrastructure to enable persons to trade securities have to be licensed by the commission or regulated by the commission in order to do what they're seeking to do. Then under that, then we would have the sort of market infrastructures like the exchange and the CSD. Now, the exchange is the entity that provides the platform for the buying and selling of securities. So it provides the marketplace, just as we have a public vegetable market, so to speak. So there's a place where people go to buy, householders would go to buy the vegetables from the persons who are selling them. The farmers who produce the vegetables will take them to the market because they know that is where they're going to meet the people who would want to buy the vegetables. Same here with the exchange and what we have created in terms of the Eastern Caribbean Securities Market. We provide the venue, so to speak, for persons who have financial assets and want to sell them, persons who want to raise capital by issuing financial instruments, and persons who would want to buy those financial assets to come together where they could have a place where they could efficiently, very effectively, and fairly exchange the securities from one party to the next. The other part of our group is the Central Securities Depository, and that is the entity that ensures that once the trades occur on the exchange, so once there's an agreement to buy and sell, you have then this entity that comes in and ensures that those trades are properly settled and cleared at the end of the day, so that the buying party gets what they have bought and the selling party gets the funds for what they have sold. So the CSD takes care of that. Then you have the broker dealers that Alana and Cedric represent, and you yourself, Omar. And you are the ones, so broker dealers are the ones that then provides the access to the markets. Broker dealers would be the ones if an entity wishes to raise capital and sell securities on the market, they would go to a broker dealer who would help them through the process and introduce them to the market where those securities could be sold. Similarly, if an individual or an institution wants to invest in securities, they will go to a broker dealer and open their brokerage account where their broker dealer could then come to the market and buy and sell on their behalf. We have a very, very efficient market here in the Eastern Caribbean. And one of the things that we sought to do, because we were creating a single regional market in the Eastern Caribbean, was to ensure that it was fully electronic, that it was dematerializing, that there were no physical securities, so that financial assets could be bought and sold seamlessly across border. So somebody in St. Vincent and the Grenadines could easily buy and sell securities to somebody in Angola. There's no need to pass physical people across from the 364 miles or so from Grenada to Angola. It's done completely electronically. Everything is done and settled by the very next day after the trade is executed. So I think what we have is a very, very efficient market that enables persons to buy and sell securities. We do this on a regular basis. Certainly every month, several times a month, we have auctions of securities where governments issue securities on the regional government securities market, and persons buy them from across the currency union. We have, Cedric mentioned 500 million types of securities. We don't have 500 million, but we have a broad range of securities that are listed on the ECSE. We have around 172 securities listed to date. We have 13 equities that are companies that are listed on the exchange. We have about 8 issues of corporate debt and about 140 government debt securities ranging from 90-day treasury bills through to one-year bills. And then we have medium-term notes and long-term bonds. We have some bonds listed up to 30 years. So there's a range of securities that are available that for anybody who wants to invest in people here on the ECSE.
Okay, thanks for that comprehensive outline, Trevor. I mean, at this point in time, I trust that our listeners, what they've heard so far, there should be a sparking of interest in investing now. But I mean, in some context or another, we've always heard the phrase, no risk, no reward, right? And the same applies to investing. There is an element of risk with every investment that varies depending on the type. We can't and should not ignore the fact that investors throughout the world have lost money during events like the 2008 financial crisis, and closer to home with the likes of Clico and British American. Alusha, give us a snapshot of the role of the ECSRC in regulating market participants to ensure that investors are protected as much as possible.
Thank you, Omar. And Mr. Blake did touch on some of the functions of the ECSRC from a broad perspective. One of the things that I would want to focus on is the fact that the ECSRC also has, as part of its mandate or its purpose, to promote investor protection through the promotion of the highest standards of professional and other activities within the securities market. One of the ways in which we accomplish that is by ensuring, one, that the persons who are providing financial advice to investors in the market are properly certified and qualified. And this we do by our flagship program, which is the Eastern Caribbean Securities Certification Program. It is a training program together with an examination at the end, where we certify persons to become eligible for licensing. So if you are interested in investing, we would ask you to, when you're looking for a financial advisor, go on the ECSRC's website and make sure that the person that you are dealing with and that you will be speaking to is a licensed professional, someone who is licensed by the ECSRC, so to do. We also license broker-dealers. And as a result of that, the broker-dealers must comply with the provisions of the Securities Act. There are provisions that relate to the conduct of business, the way they should interact with their clients, what sort of advice and information they can provide to their clients, what information they need to have in order to have the clients, give their clients good advice. We also monitor the operations of brokers, and not just the brokers, but all the participants in the market. We have entities that are what we call reporting issuers, and these are companies that would have issued securities to the market or on the market, and they also have requirements under the Securities Act that they must report periodically to the Commission or submit filings to the Commission. And that information too should also be available to investors. Essentially, that information tells the investors what is happening with the company on a quarterly basis or an annual basis in terms of their financial reporting, annual financial statements, audited financials. We also ensure that there is compliance with the securities laws. And we have had instances where the Commission would have had to take enforcement action against persons who or entities that may have been operating without the necessary licenses, or would have issued or sought to issue or to sell securities on the market without obtaining the necessary authorization from the Commission. So these are just some of the ways in which we work within the ECSRC to protect our investors and to make sure that our markets operate with a high level of integrity so that our investors are confident to invest in the market.
Thanks, Lucia. I just wanted to let the listening public know that you would notice that we do have similar backgrounds, 4 of us tonight, and all these licensed brokers are listed on there. The 2 panelists, Alana and Cedric, and myself, we're all registered licensed principals, and we represent 3 of the licensed brokers. Again, listeners, I do like the enthusiasm, but I just want to request again that you pose your question in the Q&A and not the chat. Thanks. We will deal with them towards the back end of the proceedings this evening. Alusha, I'll stick with you for a bit. I just want you, in addition to what you've described, I just want you to tell us about some of the new pending legislation that not only seeks to further protect investors, but will aid in further development of the market. I don't know if you have liberty to also describe some of the new products that could emanate once those new pieces of legislation come into law throughout the OECS.
Thanks, Omar. The ECSRC the ECSM was established 20 years ago, and the legislation that governs the operations of the market was also passed or enacted at that time. The law is the Securities Act 2001 and its regulations, and we also have the ECSRC agreement. So the ECSRC was established by an agreement among the member governments of the Eastern Caribbean Currency Union in 2001. That securities law, you will appreciate that it's 20 years old, and of course, it no longer serves, it served us well. And we feel now that, with changes that are happening in the market and the direction that we would want our market to go, we need to have implemented more up-to-date and modernized legislation. So the Commission, the ECSRC, has proposed a new securities bill along with an investment funds bill. And the investment funds bill is what I would want to explain here this evening. The investment funds bill replaces the provisions in the Securities Act 2001 that relate to collective investment schemes. What we found is that the CIS regulations and legislation that we have right now in our jurisdiction while it served us well, it has not allowed for the level of participation that we would have liked to see in that specific area. So the investment funds bill, the new investment funds bill, essentially is going to simplify a lot of the provisions that we have now and make it a lot easier to bring or to have certain types of investment vehicles come onto the market, and in that way provide greater diversification of investment products on the market. So we're very excited about that, and we're hoping that we can have the legislation enacted in all the member countries at least by the end of the year. We're we're hoping that that can happen, because we do have a lot of persons, a lot of entities who are essentially waiting in the wings to try to introduce new investment instruments under this legislation. And so we have to work with our governments to make sure and to ensure that we can get that legislation in place by the end of this year, so that when we're going into 2022, which is the ECSM's 21st birthday, we can have modernized legislation, and we can boast that we have modernized legislation, and also legislation that really would put the ECSM on a path towards where we would want it to be.
Thanks, Lucia. And I mean, we in the brokerage community are excited as well as some of our clients who have been asking about expanding the current suite of products that are on offer. Trevor, just to touch one more thing, I just wanted you to plug in here and tell us about some of the exciting new technological advancements and some of the new products that the ECSE is also exploring at this time, if you are at liberty to do so.
Thanks, Omar. Yeah, we here are trying again to remain on the cutting edge of technology. We started out as the most technologically advanced exchange 20 years ago. We want to kind of remain on the cutting edge. The single biggest trend now in securities markets is using blockchain technology to create new product and things like that. We are dabbling in that area ourselves. We have piloted a securitized token trading facility, and we are working now to roll that out in the very, very near future. So all those kids who are into the new digital sort of arena could get their feet wet in this area in terms of securitized tokens. We are also looking working with our software vendor in terms of providing online facility here at the ECSE. Currently, we already have the technology they have already completed the facility that would allow an investor to log on and view their account, so they wouldn't have to, either come to the broker or to come directly to us to find out their account positions and things like that. They would be able to update some of their bio information, etc., through that portal. We, however, want to roll the entire thing out. We want to enable the online trading at the same time as we allow them to update their CSD accounts. So we are waiting for the full rollout of the online facility, so that investors would now be able to stay in their homes or in the offices instead of coming into your office, Omar or Alana and Cedric. They could stay from their homes, from their offices, and put through their trades, so that they don't have to come into your, as I say, into your offices to trade. And in these times of COVID, that is even more relevant. We are hoping that over the next few months, maybe early in 2022, we'll be able to roll that out. I know the software engineers are working feverishly on it, and we want to ensure that it's fully tested and everything before we roll it out. So we are giving ourselves until hopefully in the first quarter of 2022, where we'll be able to roll out that feature. And I think that would be of interest to you and your clients in your brokerage firms.
Definitely, yeah.
I just want to make clear though, because sometimes when people look at online trading, they think that the traders, the day traders, as we term them, are able to come direct to the exchange and bypass the broker-dealer. That is not the case. The portal would be a portal that goes to the broker-dealer. So it will be the broker-dealer portal. So it is the broker-dealer that would have the access to the trading platform and not the individual. The individual will be doing it through their broker-dealer portal, so that the entity that has access to the platform is still the broker-dealer. And that is what happens all over the world. So when you stay and you trade if on the NYSE or wherever you may trade internationally, you're actually going through a broker-dealer. You're not going directly to the exchange. Only the members of the exchange are able to come directly to the exchange, and not the retail investor.
Thanks a lot, Trevor. So having established the market infrastructure, we'll redirect ourselves back to, we redirect the discussion rather back to generating wealth and building on it. So the old adage tells us that we should not put all our eggs in one basket. And obviously the same applies for our investments. We discussed earlier the risk associated with investing, and the best and most effective way to protect yourself from that risk is to diversify or spread your portfolio assets amongst different asset classes and issuers. Alana, describe for us the importance of maintaining a portfolio of assets as opposed to investing all your money in one asset or in one asset class. And how should one go about selecting assets for the portfolio? What are some of the key factors attention should be given to?
Okay, well, I will start probably with the last area first. In terms of, when you're building a portfolio, the first step is to understand your risk tolerance, know your risk appetite, knowing what degree of risk that you can endure. As you mentioned before, investments comes with risk. So you need to be mindful of that. It's not, without any risk. Sorry to repeat myself. I think it's understanding your risk appetite will determine whether you are a conservative investor, whether you are aggressive, or a blend between the two. A conservative investor would be one that prefers stability and security and can tolerate fluctuations in their investments. So for instance, if a conservative investor invested $100 today and they check the value tomorrow and it's down to $60, of course they will be in a panic, So conservative investors are therefore okay with, small increments, once they maintain the value of the investments, as long as it's safe, even if it's growing at a snail's pace. Whereas somebody who is aggressive in their investment appetite wants aggressive returns and is comfortable with fluctuations in their investments because they are driven more by the returns rather than just safety. So as I mentioned, there's also a blend between the two, so you can fall, on different ranges of that spectrum. Now, your risk profile will determine your investment opportunities, investment opportunities you should take. And a broker-dealer can have a conversation, a broker can have a conversation with you to guide you in terms of finding investments to match your appetite. Because we do know, pursuing investment opportunities without and not understanding your risk appetite can cause some discomfort. And we know the emotional trauma that comes with, losses if you're not prepared or aware of them. And as I mentioned again, investment doesn't come without losses. So, or I shouldn't say losses, without risk, I mean risk. So the key is really balancing the risk in your portfolio, building a healthy portfolio that helps manage the riskiness in one asset versus another. So you can build a portfolio that has various instruments, so you can diversify on different levels. You can diversify based on your instrument type. You can diversify based on your length to maturity. You can diversify based on the sectors that you invest in, as well as country. So, and there are other areas that you can drill down for your diversification. So that's really, in terms of building a diverse portfolio, things to consider.
Yeah, thanks for that, Alana. And I think you hit the nail on the head very early when you said that investors should really take some time to assess what kind of investor they are. In my experience, I've seen some investors tell me that they're conservative, but then they want to earn 10% per annum, and that's just not possible. Remember, no risk, no return. So the more return you want, you have to be willing to take on more risk. Cedric, you want to add anything to what Alana said?
Yes, Alana did speak to the risk profile of the investor, which is important, and the importance of diversification, because diversification serves a purpose, and that is mitigating that risk. I mean, a conservative investor, like Alana did mention, would want to consider primarily fixed income instruments. So then you consider that asset class, which is less risky. And you have the moderate investor would want a blend, a 60-40 blend, which is typically an approach towards fixed income, and then you have some equities. Equities tend to be more volatile than fixed income. And fixed income, I mean bonds and CDs, instruments that provide you that fixed stream of income as opposed to equity. But it's important to understand the importance of diversification when you're mitigating your risk, because you have various asset classes, and I mentioned fixed income, I mentioned equities, and we're talking about cryptocurrencies now. It's the talk that we keep hearing over and over again. I mean, after the financial crisis, this is a big thing, and as much as it is a speculative asset class, it can help with that diversification. I mean, where you can do your 2% in cryptocurrencies, do 60% in fixed income, and do another percentage in equities. You also have your alternative type structures, and that you also have to consider as well. But once you understand the risk profile, your risk profile, you understand your tolerance for risk, you are better able at selecting these investment vehicles. And it's important to notice that distinction. You also have to look at your liquidity, because a lot of mistakes we make as investors is that we invest $20,000 and in 3 months' time, we have to pull out from that investment. And we have to always keep in mind that this is a marathon and not a sprint. I mean, you need to know what your selected goals are. You need to know what your time horizon is, and Alana did speak to that. And then you need to create that risk profile for yourself, because investing does take into account the goals that you need to set for yourself in the future. Because one thing about, yes, you know your risk appetite, you know your risk tolerance, but you also need to know your investment horizon. What are you investing towards? Is it towards retirement? Is it towards a home? Is it towards buying your private jet? I mean, all of these things are things that you need to consider when you are putting together your risk profile. I mean, because something that is critical is risk and return. And we have to be mindful of that. I mean, if you want to take minimal risk, the return will not be as high as if you want to take significant risk. And these two are inversely related. So all of these factors need to be considered. You have to look at the goals that you set for yourself in the future. You have to look at what are your plans for the next 10 years, 15 years, 20 years. And then you have to assess, okay, what is my risk profile? Am I a moderate investor? Am I a conservative investor? Am I an aggressive investor? Am I a mix? And then you work within the confines of that. You set your goals within the confines of that. But you have to set the goals that you need. You have to set your time horizon, which is very, very important. And you have to know what these goals are, and you need to stick to them. So all of this forms part of that assessment when you are making that assessment for your portfolio. And
Cedric, I'm going to put you on the spot now, right? And I think our listeners might enjoy this. So we're just going to throw out a scenario for illustrative purposes. And I want to be clear that this is an example for the purposes of this discussion, just to further elucidate portfolio management and portfolio creation. And this is not an actual case or should not be construed as investment advice. So just throwing that out there. All right. This is just for illustrating purposes. So John is 32 and John has saved $50,000. He plans to build his home at 40. So that's 8 years from now. And he wants to retire at 60. That's 28 years from now. John is able to save roughly $4,000 a month. So Cedric, I want you to tell us how you'd go about advising John, considering his goals and his timelines on developing an investment portfolio.
Okay, well, John looks like he has set his goals, which is very, very important. He has set his time horizon. He wants to retire at 60. He's 32. Omar, I hope you're not asking that question for yourself.
Well, I'm not 32.
Yeah, so John is 32 and he's going to retire at 60. So he's already set that goal. He saves approximately $4,000 every month. A couple of things that we have to be mindful of there. When you give advice, apart from just as much as you don't just look at the individual, you also have to look at what benefits the individual can realize from saving. One thing that's critical is because he's saving towards a home, you have that tax deduction of $6,000 annually in St. Lucia. And I'm sure that is the case in other jurisdictions as well. So you need to know the income tax laws in your jurisdiction. And it's important. And we as brokers, we would know these laws and we would advise our clients accordingly. That $6,000 annually is a deduction against your disposable income, which assists you on an income tax end. For retirement as well, you have these retirement savings plans and these retirement supplemental plans that also provide that $8,000 annual deduction that also assists you in meeting these goals, which is critical. The $50,000 can be utilized towards purchasing an instrument, whether because you are saving this, using it for your home, and that could be used as your 10% deposit. I'm assuming a guy like you, Omar, would want a $500,000 home, so that 10% would add towards that. So then you can utilize that, probably investing in a fixed income instrument which has less risk, right? The retirement savings accounts, is a contributory account that you save towards retirement monthly that can also assist you. So we're taking a lot of that $4,000 right there. The home savings account, I think there are a number of them. I think Bank of St. Lucia has some, and I think a number of institutions have some as well. I mean, even if the retirement account, I believe we have one, First Citizens also has one. So, and you get them throughout these regions, and we have to leverage these instruments. You also now have to, with the remaining 4,000, whatever is left after you consider this, you have your credit unions that you also get a tax benefit from, which you also need to consider. So all of these goes towards your strategy. The $50,000 is invested in a bond instrument. You can now speak to your broker about looking at equity type structures that, are not as volatile. You can even discuss other structures. I mean, there are a number of structures that are being considered right now. I mean, Ms. Faisal did speak to the new investment bill that will bring in a number of new products to the market. And these products can be utilized to help John earn that income that he needs to generate the wealth that he desires. So all of these factors have to come into play. You have to look at the tax element. You have to look at retirement, which is very, very important. You have to look at his liquidity. What are his liquidity needs? Yes, he says he has $4,000 to save, but is that what you have to save? You assess his income versus his expenses, and then you now have a full idea of, okay, this is your $4,000, and what can you do with that? You put some a percentage in savings, as I think savings plays a critical role as much as the minimum savings rate is 2% and inflation is very high, but it does play a critical role. The home savings accounts are very, very important. They usually have a higher interest rate than a typical savings account, and you get that tax benefit. And you have the retirement accounts that also provide a higher interest rate than a typical savings account once you are saving towards retirement. So these are the avenues that I would suggest this individual, because based on his age, he is at 32 years, so he's still at the early ages of accumulation in his life cycle, his investment life cycle. So it's important. He has a long time to go. He can take some risks. He can invest in equities. The 50,000, because it's going towards the home, he should consider a fixed income instrument in the interim till he gets to that point. But because he has 4,000 saving monthly, apart from putting aside for retirement, putting aside for the home, he can consider putting a portion for savings and also putting a portion towards looking at some equity instruments. But it's important to speak to an investment advisor about this. So this is my response to your hypothetical question. Once I get an assessment of what he truly wants, what his true goals are, there are more questions I'll ask. I'll get a sense of his risk appetite, and then I can provide more information. I could give him more ideas to consider. I could disrupt his thinking and make him consider instruments he never thought of. So these are the things that we need to look at.
Thanks, Cedric. I just wanted to reiterate that, I mean, this was an example for illustrative purposes. It doesn't mean that if you're older than 32 that it's too late. It's never too late to commence the process of building that portfolio and starting your investing. So while John does have time in our example, it's never too late. Quickly, in 3 minutes or less, I don't know if anybody else had a different plan for John on the panel. I did see in the chat some folks were throwing out their plans, but for John, quite interesting. There's no right answer, by the way, because it's really dependent on what your goals and your timelines are, as we established. John luckily has clearly established goals and timelines, so it would be, I wouldn't say easier to invest in, but a lot more simple. You can direct them in a more clear path. I don't know if any of the other panelists, Lucia, Trevor, just some quick advice for John and the other John likes on the call tonight.
Yeah, Omar, I would come in. I just wanted to add that even after you assess somebody's risk profile and you look at their statistics in terms of their financials and so forth, there's also one element that we need to still factor in, which is their comfort levels, especially persons that are new to investing. Even though you might be young or you are the ripe age to be, let's say, considered an aggressive investor, there are some people who are fearful for different reasons, several reasons, which are all valid, right? So we also take that into account, and we never force or impose investment structure. We recommend, but we always try to work with the client to get them on that path. So you might find that John, even though his statistics show well, he may need to start off because of his comfort level, his past experiences, whatever it is. He may need to start off on a slower path and eventually move to the path that the risk profile assessment shows that he should go. But you work with the client to take them along that journey, because it is a journey. Even as we speak about diversification, I just wanted to mention, which I didn't before, that when it comes to risk, you can avoid the risk, you can diversify the risk, or you can manage the risk. And diversification, therefore, is a tool, in the whole risk framework when you engage in investments, because it can even help you maximize returns, minimize your losses as well. Because you have assets within a portfolio that react differently to sometimes the same event. So you have different results, giving you a balanced approach because you diversify your risk. What I would say to somebody who's considering investing is that you need to, consider, again, we spoke about savings versus investing, and they both are parts to, as Cedric mentioned, to wealth creation. And I still want to emphasize the value of savings, because that is a safe measure for a lot of our people in the region as well. But if you're contemplating whether to start investing, I think, or focus on your savings, I think you need to, again, as you mentioned, consider your goals, your risk tolerance, but always remember that you should invest what you can afford to lose. Don't invest what you need to survive. You don't want to be investing your electricity bill that you need to pay, next month. You don't want to be gambling with money that you need to survive. So start investing with funds that you can afford to lose, or can afford to take a decline on if there are risks. Have you considered an emergency savings plan? So I would ask John, does he have something put aside for unforeseen events, because life happens. And typically that is between 3 to 6 months worth of living expenses, just as a buffer before, you venture into investing. And sometimes even as we speak about loans, so just ideas to throw out, what stage are you at your loan, your loan payments, or a loan that you are now obligated to? Is the interest rate that you're paying on your loan higher than what you would attract on an investment in the market at this time? And maybe based on that, it may be at this point, it may make more sense to pay down your debts until you're at there are opportunities to really help you capitalize. So those are just some additional things to consider.
Very important. I just take one more nugget on John, if possible.
I think John has quite a bit of advice from the two broker dealers. I think John is all set to go. The only thing I would have to add to that, start now, John. Don't wait.
And from the regulator's standpoint, we'll tell John that he needs to go to a licensed broker or broker's representative to get advice. And the advice given here from the licensed principals is testament to the ECSM's program.
Okay, thanks. Okay, we were supposed to play a video at this juncture. Not too sure if we're having some technical difficulties.
We at ECSRC realized that these are hard times for everyone. And recently, we have seen a rise in the incidences of persons being scammed by sneaky characters, often posing as supposedly successful investors. They invite you to meetings, maybe even offer a free meal, and then pressure you into being part of a scheme to make money fast and easy, with no risk. And so often, many lose their hard-earned funds and cause people who trusted in them to lose their precious monies too. Reputations damaged permanently. But there are ways to protect you and your loved ones from these schemes. Firstly, there is no such thing as a high returns, no risk investment. Easy money does not exist. Secondly, if someone pressures you to make a snap decision with promises but no proof, that's your first red flag. Take your time and research the plan and the person, no matter how well you think you know them. They are likely a victim too, but believe what they are saying. Another big red flag is when the only way the scheme pays out is by you bringing other people to pay in. The last people coming in will lose their money, and that might be you. Beware the group plans. Some even specially target religious groups to appear legitimate. It's the halo effect. You believe them, so you trust them, and you feel ashamed to ask pertinent questions. No. Look past the halo. If you have a question or concern about an investment, or you think you have encountered one of these frauds or scams, please contact the ECSRC. Report the fraud and become informed to protect yourselves and loved ones. ECSRC. Protecting investors, building our future. We at ECSRC realize.
So the video you just watched was an example of the work the ECSRC continues to do in an effort to protect the investing public. Culturally in the Caribbean, these pyramid schemes and other get-rich-quick schemes are prevalent. We also have a pension for saving schemes like SUSU and Partner Hand, which, while not illegal, don't offer a real return. Alusha, explain some of the risk involved in schemes like those and explain how the public can better educate and protect themselves.
Okay, thanks, Omar. The ECSRC has witnessed since the dawn of the start of the COVID-19 pandemic, we've had incidents in our jurisdiction in a number of countries where persons were being invited to meetings to invest in certain types of schemes where you would need to bring in one or two persons to invest with you, and essentially your returns were based on the number of persons you could bring into that scheme. ECSRC took a very proactive approach in that regard, and we issued a market notice in conjunction with a number of the regulators in the territories. As the video shows, these types of investments are called pyramid schemes, and they are indeed very risky because, as the video indicated, your earnings are based on the number of persons that you can bring into the scheme, and the more persons that you bring in, the less your return, because at the end of the day, if you are one of the last persons in that pyramid or in that scheme, the chances are there may not be enough money in the pot because that money is not being reinvested to earn any monies on behalf of those persons who would have invested. So the more persons who come in, and usually what you find is that the person who is controlling the money is perhaps just one individual at the top of the pyramid who is collecting all your money and not reinvesting it. And they pay in the beginning, they will pay you back because they want to keep the program going. But eventually, as time goes on, it becomes more and more difficult for them to be able to pay off. And in some instances, we found that these persons actually abscond with your money. So we're encouraging our investors to be very smart and savvy and to look for the red flags. In the case of a pyramid scheme, at the end of the day, the persons who come in last usually would lose their investments. We also have situations of forex trading, and that is something that is very, very popular in our jurisdiction. And forex trading also involves a high level of investment fraud and scams. Forex scams often pitch too good to be true investment opportunities. Often they guarantee unusually large profits with little or no financial risk. And this may sound very attractive to the novice investor. As the saying goes, the only free trees is in the mousetrap, as I like to say. If something sounds too good to be true, it probably is. So how do you avoid these types of scams? Be especially wary of software, especially in the case of Forex, because you are normally invited to download a software, to install a program on your computer. You need to be very wary of these types of offers and opportunities. And basically, they tell you that all you need to do is to send or download the program and you can start investing. Usually, downloading computer programs, we know that comes with a risk as well. And also, these types of arrangements are usually, as I said, too good to be true. We also have, and more recently, work from home scams. Due to the impact of COVID, many persons may be looking for ways to make money without having to leave home, or they may have lost their income and need to make money. The scammers will be trying to capitalize on this, and they offer you an opportunity to earn quick money while you are at home. Some of these scams may include internet businesses, and you may think that these are legitimate, but in most cases, they are not. You are told that you can earn thousands of dollars a month starting your own internet business. You don't need any experience because you have experts who will coach you, and you are pressured to pay for the opportunity right away. And while I'm speaking, I do recall that when you go on Facebook sometimes, or even on YouTube, you see a lot of these videos with persons telling you that they've left their jobs and they're investing and they're making money, and all of a sudden they're now millionaires. You need to be very wary about these types of claims and these types of investment scams.
I would just like to jump in here that, when you know better, you do better. I think our generations before, investment culture is not strong in our region. Sometimes it's considered non-existent. So it was easier before, I think, for people to fall, victim to a lot of, these schemes. But we have to learn from the lessons and from the experiences and failures in the market, not just failures, in the region, but even globally, learn from the mistakes of others so that we don't fall prey to some of these same mistakes. So we know that people in the region are still grappling with some of the negative effects, some of the negative experience due to market failures in the past. We have to remember that there's always a trade-off between risk and return. If the return sounds too good to be true, as Ms. Faisal said, then maybe it is too good to be true. So you need to be cautious. And as much as you can gain so much, you can lose so much. So, we have to be mindful of that. And we have to, as Ms. Faisal mentioned, strengthen the legislation as the market develops. Oftentimes, generally legislation normally lags market developments, but they normally are there to protect us. So we have to see and ensure compliance with the rules that are made for preserving our very market that we operate within. And getting rich quick, that mentality would only cause people to fall victim to these schemes easier. As Cedric mentioned, it's a process, it's a journey. And again, if it's too good to be true, maybe it is.
Alana, I want to stay with you, and I just want to let the participants, we are running a bit behind schedule, but that's a good thing because the discussion is pretty engaging and very energetic. So we may go until 8. There are a lot of questions in the Q&A to get to, a lot of very interesting questions. But I want to build on that point you just made, Alana, because I'm sure there's some people saying, well, some of these opportunities do exist, right? In January, we saw frenzied activity on the NYSE, New York Stock Exchange, owing to the Reddit group Wall Street Bets and their actions on the stock market. People who were holders of stock in GameStop and AMC, they became millionaires overnight, and this actually happened. So you see, events like this, they do bring welcome attention to investing and financial markets, because when these things happen, brokers like myself, we do get a lot of calls. But it really boils down now to expectations. So an investor may retort and say, well, no, I actually know of people who've made X amount and who've done this and who've done that. So Alana, just describe how best to manage expectations, surrounding returns on our investments, which would allow us to make better decisions. We can't ignore the fact that, yes, there are people who have become millionaires overnight, and I boil it down to luck, but there are people who may be on this call who think that that's actually a sustainable investing strategy.
Yeah, well, it's all about and sticking to your investment strategy, knowing, we're coming back to the same thing, but that's really what it comes down to. Knowing what you want. You cannot be comparing. Yes, there are these anomalies that take place for one reason or another. And there are sometimes lucky happenings, but at the same time, it's not an entitlement. It's not that everybody who invests is entitled to these windfalls. So we prepare as a normal person would do in terms of growing our wealth in a proper way, managing our expectations, again, understanding the relationship between risk and return. The higher the risk, the higher the return, the greater the risk, and vice versa, and being mindful of your potential for loss. A lot of the time we go into the conversations, about investments, but you have to be, again, never forget the risk element. Once you're aware of it, it gives you a bit more comfort, in your undertakings, and helps you in terms of your management of the risk. But again, even in terms of I think there was a recent one where there's this a show on Netflix, a popular show on Netflix called Squid Games.
Squid Game, yeah.
And I think recently they had a digital cryptocurrency being issued, and people started to flock it. And within a few days, the investors left off with their funds, So we just have to be mindful, guarded by what's going on in the market. Investors have a responsibility to protect themselves as well. They have a responsibility to speak up and make their reports also to the regulatory commission on instances where they have some discomfort or they feel some abuse or misuse. So I think education is also part of the process.
Yeah, and I think we as the gatekeepers of our market, we definitely have to do a better job at educating the public to get a handle on the narrative. While we can't outpace the international media, we have to set the agenda. It's interesting that you brought that up, because actually it would be remiss of me if we had this discussion and we didn't chat on cryptos. Trevor did bring up the blockchain technology, and Cedric did speak to it. So we're going to take a little bit of a deeper dive. Cryptos have been around for some time.
Before you go there, Omar, please, if I may, I just want to say, and sometimes in the media we hear about these frenzies, this like the GameStop thing. It doesn't quite happen like that. It just doesn't mean because you're there you're going to make money. Typically, when we hear about these things, the money has already been made, and when you get in after that, you tend to lose money.
Yeah.
So we have to be very, very careful of the fads, and it doesn't happen overnight. And the persons who are there and who benefited from that arbitrage opportunity are people who have been in the market for some time, have built up the positions, etc., so they could benefit from it.
Right.
You just go in today and tomorrow you're going to benefit from something like that. Creating wealth doesn't happen overnight. It's the work of steady strategic strategies, strategic investments, that work for you over time. Arbitraging opportunities may come, and when they come, you have to be in a position to benefit from them. So you have to put yourself in a position in the first instance, even to benefit from something like that. And for everybody who made money in those situations, there are people who lost. So let's remember that.
There are winners. For there to be winners, there must be losers. Yeah, and unfortunately, the people who lost were ordinary people, like me and you. Cedric, I see your mic unmuted.
Yeah, because this is a very interesting discussion as we are on this area, and I think it's important to reiterate and reinforce Alana's statements as it relates to sticking to your strategy, having the discipline to stick to the strategy and not deviate. And something else that we need to be mindful of is when you're in doubt, you ask the question. Aluja did indicate that we have licensed individuals in the market that you could go to and ask the question. I am sure if you give Omar a call, you give me a call, you give Alana a call, you have a question about a specific investment vehicle, we will give you our opinion on it. And I think it will be unbiased, and it will be fair, and it will be based on our history, our knowledge of the market. Because we've seen these things many times before, Omar. We saw it even in our region. We saw it with Clico. That was a typical example. So these things are nothing new, and these schemes tend to happen during a crisis, because during a crisis, that is when everyone is in this point of desperation and you're looking for this hope. And I think it's something that is just built in the mindset of a human being. I mean, if you're a neuroscientist, you will understand that people get gratification out of getting things, money quick from a venture. And you have to always learn to just steady that course, stick to your strategy. You know, you've spoken to your investment advisor, your broker about it, you stick to the strategy, and the odds are it will work, because we have assessed it, we have looked at the market, we have done this many times over, and we know the pitfalls. So it's important to ask the question.
And just to add to, you know, as brokers, we would also investigate the issuers of these instruments, you know, and as issuers on the market, you have obligations to file certain reports and certain compliance measures with the Eastern Caribbean Securities Regulatory Commission. So we can verify that that issuers are actually legitimate, you know, whether their operations are in keeping with what the commission considers, you know, valid, you know, in our market. So we do have a responsibility, as Cedric clearly says. If you have a question, you ask, you know, we can guide you, you know, as to legitimate investments in legitimate options in the market.
Okay. So at this point, I'm going to ask our admin to go ahead and put the link for the trivia in the chat room, so that folks on the call can begin to take part in the trivia. As I mentioned, there is $500 to be won tonight for the winner. $500 goes towards an investment trading on the ECSM of your choice, and the winner will be announced tonight. But I just want to touch on a few things before we get to the questions in the Q&A. A lot of very good questions in the Q&A, and we want to address them. And one of those is cryptocurrencies. We've been chatting for an hour and a half, and we knew we were going to get here at some point. They are a very attractive investment option because of the returns. The returns on offer today, they've been around for some time, and a lot of people have caught wind of the buzz in the media. And we also have the launch of a few digital currencies, and cryptocurrencies and digital currencies, as Trevor would have discussed, security tokens as well. They all utilize the same blockchain technology, right? So Cedric, I don't know if you could just explain in short the difference between a digital currency and a cryptocurrency, because even in our own region, the ECCB launched a digital ECXED pilot. And sometimes folks conflate that with a cryptocurrency. So just explain the difference between digital currencies and cryptocurrencies, and tell us what your views are on cryptocurrencies as an investment option for citizens in the region. A lot of people on the call want to know.
Okay. Omar, I tend to look at it this way. Cryptocurrency is the space, and it's in the space of digital currencies. You have the central banks that actually have functional digital currencies that is separate from a cryptocurrency. Cryptocurrencies have reached this point where it's no longer considered a currency, but more of a commodity, because it trades that way. And a digital currency that is typically issued by a central bank would essentially be utilized like cash. I mean, it's essentially in most instances just a substitute for cash, not a replacement for cash, but a substitute for cash. But it is in a digital form, and that is the digital currency normally issued by the central bank. Cryptocurrencies use cryptography, and it is different. And due to what we've experienced, because remember, cryptocurrencies began after the financial crisis, you know, and it has grown astronomically during this financial crisis. Now, I'm going to segue into my views on cryptocurrencies right here. And I will tell, I mean, just full disclosure, I have traded cryptocurrencies. I've been trading cryptocurrencies from 2010. So it's nothing new to me. And cryptocurrencies are an asset. Well, it's somewhat of an asset class, a commodity, and it's a speculative asset. That's the reality. It is very volatile. It is more volatile, 3 times more volatile than a stock. And I'm not quite sure if people are aware that, let's just look at Bitcoin, for instance. Bitcoin lost its value in 2011, 80% of its value, and it lost its 80% of its value 3 times. So with my views on cryptocurrencies, I will say this: cryptocurrencies are here to stay. But you are dealing with a space of over 13,000 cryptocurrencies, and not all cryptocurrencies are created equal. With that being said, I think we need to be mindful of the cryptocurrencies that we get into, understand the risks of cryptocurrencies, because it is a speculative asset and it is very, very volatile. I mean, I'm sure if most of us have been following cryptocurrencies, we'll be mindful of, I mean, when Elon Musk said that he would accept Bitcoin, the price of Bitcoin rose to over $67,000. And when he somewhat retracted the statements, the price literally dropped significantly to a tune of over 15%. And that just speaks to the volatility of that asset. However, it is an asset that cannot be neglected, because this asset has a value of over $2.5 trillion. That's the market cap of the cryptocurrency space, which is significant. And it's something that shouldn't be overlooked. The concerns I have about this, and I, as much as I said it's speculative, as much as it's speculative, it is an asset you can utilize in your portfolio once you understand the risk, and I will stress, once you understand the risk, because it is very speculative. I mean, if you want to do 1% in cryptocurrencies in your portfolio, if you speak to an advisor and he's assessed your risk profile, he can recommend, but we have to be mindful of where the cryptocurrencies are going. This is growing, and this is a growing market space that is almost the size of the high yield bond market in the developed world. Now, when cryptocurrencies gets too big, what ultimately is going to happen is there's going to be significant regulation. And we saw that with what happened in China, where China essentially just chose to just ban cryptocurrency transactions altogether. Now, that is a huge concern when we discuss cryptocurrencies, because once you get to a point where you are so large that you affect the liquidity of markets, you will be regulated. Ultimately, regulation will come, and significant regulation too. I'm not quite sure if you're aware of the shadow banking industry that actually crippled the financial markets. And that is where cryptocurrencies are headed. It is relevant because of its importance right now. I don't think regulators saw cryptocurrency as this thing that wouldn't get to the point that it has gotten. But during COVID, we saw a significant spike in inflows into the cryptocurrency market. And eventually and ultimately, this is the biggest risk, and that is the risk of regulation. Once regulation comes in, you're gonna see more stability in cryptocurrencies. There's a lot of volatility now. Those who are coming in quickly, they will make money, but it has some significant risk. And we have to be very, very mindful of that. And that's why it's important when you are trading in cryptocurrency, you have the discussion, you ask the questions speak to your financial advisor and you find out whether or not this is right for you. And it's important to make that distinction. Omar.
So I just want to ask quickly, because you did mention that fundamentally the landscape would change once it's regulated, and that's probably likely going to happen. But closer to home, Secretary Faisal, we do know that there is quite a bit of appetite for it. We even have Bitcoin ATMs in some of the OECS islands. Are cryptocurrencies regulated in the OECS at this point in time?
Great question, Omar. No, they're not. The short answer is no. However, there is legislation that is being proposed, and it is something that is being looked at. So as of now, I can't say definitively yes that it is regulated, or what the position will be down the road. But I think it is an area that is being looked at by the regulators as well as ECCB as well, and the regulators in the countries. And going hopefully down the road, there may be some changes as it relates to that. From the ECSRC's perspective, we look at digital assets, and for us, when it comes to regulating that type of activity, we would look at the characteristics of what is being proposed in order to determine whether or not the type of activity would fall within our purview under the Securities Act. So while there may not be specific legislation relating to digital assets, the ECSRC is very vigilant in that regard. And what we do ask, we do get a lot of questions from persons in the market. And what we do is we would assess each application to determine whether or not the activity would fall within the securities laws. And if not, we would then perhaps take a closer look at what is being proposed in order to determine how to move forward in that specific area.
Okay, thanks. So at this point, we're going to start taking some of the questions from the Q&A. And in the Q&A and in the chat, there seems to be a common theme surrounding training. Good evening. Are there any courses or training available that one could attend that would assist them in making informed decisions in relations to investments? So Trevor, I know that the ECSE has been putting on some training courses, so I'll allow you to plug in here.
Actually, we partner with the Commission on the Eastern Caribbean Securities Market certification workshop, and I think Ms. Alusha is better pleased to discuss all that would be. But anybody who's interested could actually join that workshop too with Alusha.
Yes, thanks, Mr. Lee. Yes, the Eastern Caribbean Securities Regulatory Commission, together with the ECSE, hosts twice a year. We try to put it on at least twice a year, the ECSM certification program, and it involves webinar training on areas such as economics and portfolio management. We also look at the securities laws, give you a sort of an introduction to the market infrastructure, which Mr. Blake would have touched on earlier this afternoon. We also, there's an exam at the end of that program to test your knowledge and your competence in those areas that we would have presented on the program. The next program we're hoping to have in early December, and we will be issuing the notice and information to the market so that you can sign up. One of the things I want to add as well is that the CSRC earlier this year signed a memorandum of understanding with the Chartered Institute of Securities and Investments in the UK. And under that MOU, the persons who sit the exam and are successful would also earn an internationally recognized certificate in the various courses that they would have to undertake with CISI. So the program is going to be a two-part program where you do the courses related to the ECSM, and then you would have to do some CISI programs that we would have selected based on what we think you would need to have, the qualifications we think you would need to have to operate in our market. And after you've completed those CISI training programs, you would get a certificate from CISI, which is internationally recognized. So we will encourage persons to sign up for that program and get involved. And just to add as well, ECSRC is also looking at partnering with other entities and other persons to provide financial literacy programs, investor education programs to the market. We recently partnered with the CFA Society of Barbados, which also serves the Eastern Caribbean countries, to put on one of their financial literacy programs, savings and investments, and that will be on Monday. So I think we would have shared the link. So these are some of the initiatives that we are offering and that we undertake in the market to build financial literacy.
Yeah, and as I mentioned at the beginning, this is the first public education event. Over the next 12 months during our celebration, there will be other public education events that will take a more granular look at investment fundamentals to get you started. We should expect to have our next event sometime in January. So the details of that will be provided, where we'd actually go through the steps required in a more detailed fashion. This was just to set the stage and get the conversation going around investing. Another interesting question from the chat, from the Q&A, sorry, I think I just wanted to bring this to the fore, sorry. Oh yeah, someone asked, what are the risks or benefits of going through a broker instead of trading personally? So I'd ask one of the brokers to just answer that one fairly quickly, because I want to get through a few more of those before we wrap up.
Well, I would answer, specifically in terms of our markets. As Mr. Blake mentioned, the broker is a licensed intermediary between the exchange and the customer, the investor. So as the law requires, you are obligated, or you have to go through a licensed broker dealer in order to execute transactions on the Eastern Caribbean Securities Market. Because of the training that we would have undergone, there are obligations that we have to ensure that, that the investor upkeeps, as well as in terms of the instruments that we recommend, and also understanding the activities of the issuers so that we can make proper recommendations. So as the legislation in our region requires to trade on the Eastern Caribbean Securities Market, you must do so through a licensed broker dealer.
Yes, and Omar, to add to Alana's point, I mean, because we license, we have a fiduciary duty, or else we lose that license that we worked so hard to get through the passing of that exam, Aloysia. So the individuals need to understand that because of that, and because this is our fiduciary duty, we have to do what's in the best interest of our clients. And so when you come in, you engage us, we have to serve and do what's in your best interest. And it's important for that to be known. And once you have a fiduciary duty, you have to ensure that you abide by that duty. And I just need to add that point.
I should add as well, Omar, just for the question's benefit, there's no exchange in the world that allows you to trade directly with them. Anytime you trade on an exchange, you are doing so through a broker dealer. So even if you are a sophisticated investor, you have to go through a broker dealer to get to an exchange. You may be doing so online, so you're going through a portal, and you may think you're going directly to exchange, but you're not. You're actually going through a broker-dealer.
Yeah, that's a very good point, Trevor. Yeah, because you know that these brokers are normally called discount brokers, and they utilize a platform, but like Trevor did mention, they are members of an exchange, and it's still an intermediary platform.
Yeah, so another interesting question, Trevor. The ECSE has lower trading volumes and inadvertently not much capital appreciation within a short time frame. As a young investor, how can we gauge what exactly is aggressive solely in terms of equity?
I didn't get the second part of that. What can you gauge, or how can you gauge what?
Yeah, I guess he's saying that because there isn't much capital appreciation and not much opportunity for capital gains, how can you gauge how aggressive you really are when trading equities in our market?
Well, let me just say that the return you get on equity is twofold. First, you get the dividend income, and then you get the capital appreciation. And while I do take the point that because of the relatively low levels of trading, you may not be able to realize that capital appreciation as readily as you would probably want. The values, I think, are still there. When you look at the share price and the movement in the share price for some of the securities, it actually does track some of the capital gain. But what we want and to really, in order for us to see the true valuation mechanism of the market happening, is for people to trade more actively. We have a strong buy and hold culture in our region, and that's something that is really retarding the growth in the market. When we buy securities, we tend to look at it as we are buying a share in a company. So I'm a shareholder in Bank of St. Lucia or ECFH, or I'm a shareholder in Glen Lake or Lucy Lake or what have you. And we see ourselves as part of the ownership. We own this company. We are part owner of this company, instead of looking at the shares as just another commodity that you should be willing to buy or to sell if the conditions are right. If you could generate more income by selling that and buying something else. So we have to look at our shares as commodities and have them available to be bought or sold on an ongoing basis. So everything that we hold should be available for trade. And not look at it as something that has an intrinsic value in itself, but just as another commodity that you have to be sold and bought.
Uma, I would also like to add to Mr. Blake's point, the fact that there are limited issuers, because there are a lot of companies throughout the ECCU who are ripe for listing, but for one reason or another, they are shy. They shy away from the opportunity to raise investments, to raise capital from the markets. So they either seek to get a loan, which is also an avenue, but to offer the opportunity to investors who would like to, join in and give them the support and get a reward for their sacrifice. So a lot of the companies, sometimes are, traditional companies that have grown from the ground up, and they believe that, if you list on the market, you lose some control or you lose that legacy. But really and truly, there are ways you can still preserve your vision and your mission, and still benefit from what the market has to offer. So we have seen limited companies being listed, but definitely the more that are listed on a company, the more active the market will be, the more opportunities, the more returns, the more diversified your portfolio can be.
Yeah,
and another factor, is in terms of making liquid and active markets is a function that I'm dying to see introduced in our market, and that is one of market making. You need, for there to be activity, you need market makers who are willing and ready to be on either side of a transaction. And while I wouldn't put anybody on the spot, I'd just like to say that is something that we sorely need in our market.
Indeed, Trevor. So we're about 10 minutes from the close. As I said a short while ago, we would go up until 8 o'clock. There are a number of questions in the chat, but there's a common theme about not being able to contact brokers. So I just wanted to plug in that the list of brokers is available on the ECSE's website at ECSEonline.com. And I mean, I won't disadvantage any other broker by giving my contact information, but we are fairly accessible. The contact information is available on ECSEonline.com, and we do encourage you to give us a call or send us an email, and let's get the conversation going. I'm particularly pleased to see a number of folks from Antigua on the call, and they made the point that yes, there isn't a broker dealer there, but I do know that all the brokers in the region do serve the Antiguan public, and the government of Antigua is an active issuer on the RGSM. So we do serve Antigua. We do serve quite a few Antiguans. So throughout the ECCU, just go onto the website and you could make you could get in contact with one of us with the contact information that's there. Additionally, I just wanted to indicate that the trivia has closed. It was only open for 10 minutes. Quite a few folks participated, so we thank you for that. We will be announcing the winners before the close. Just wanted to get to a couple more questions before we close off. And one says, do you think that your age is an important factor that must be considered when deciding your investment?
Okay.
Sorry.
Go ahead, Alana. Ladies first, as always.
It's not the only factor, but it is a critical factor because your length of time to recover from a shock. Let's say your investment, for some reason, the investments you engage in are of high or riskier. You have a greater length of time to recover from that risk than somebody who's at retirement age. So it really does play an important factor in recommending a portfolio for a client. It's not the only factor, but it is a key factor in understanding what might be best for a client.
Just add, it's never too really late to start. Alan is quite correct. So in taking your age into account, she will then advise you as to the type of investment that you would want to make given your investment horizon. But it's never too late to start. You can start at any age.
All right, so we're 7 minutes from the close, and I mean, there's so many questions in the Q&A, and these are questions that we do want to address. I mean, we could stay until midnight tonight and keep the conversation going, but we have to bring it to a close. We're already past our allotted time, and I do thank all the participants for staying on. So at this point, I'll ask the admin to queue up the winner's wheel so that we can select a winner for tonight's trivia. And following that, we'll have closing remarks from each of the panelists, and then we wrap up. So let's queue up that winner's wheel. All right. Johannan Laffey is our winner tonight of our trivia. Congratulations, Johannan. You've been very active in the chat, and we look forward to hearing from you. You've won yourself $500 to go towards an investment of your choice. through a broker of your choice. So if you need any info, if you need help contacting a broker, if you don't have one already, you could visit the ECSE's website and go through the list of brokers and choose one that is most convenient to you. Thank you so much for participating, Johanna, and all the other participants. And we trust that you had a wonderful time answering the questions. So we move now to the closing remarks. I will start with, in no particular order, I'll start with Lucia.
Yes, thank you, Omar. I must say it has been a pleasure being part of this discussion, and I do look forward to many more of those in the coming weeks and months. Just to remind persons that as investors, you should always take control of your finances. You should ensure that before you invest, that you do your research and you ensure that whoever it is that you are investing with is a licensed broker and a licensed representative. We at ECSRC, we have a list on our website, we have information as well on brokers, those who have been licensed by us, as well as not just the individuals, but the companies that they represent. On the matter of investment scams, which we brought up, one of the responsibilities of the ECSRC or our mandates is to protect investors. In addition to regulating and supervising the market, there are a number of activities and initiatives and actions that we do take to ensure that when you invest, you can do so safely and that we maintain the integrity of the market. So you can, as an investor in the ECSM, be confident that when you invest, that your investments are safe and that the market operates in a fair, efficient, and a safe manner. Thank you.
Thank you, Lucia. Cedric?
Yes, well, I think it's important to continue to have these discussions and the dialogue and create that sensitization that we need in the market. What was important about this panel is that we have the CEO of the ECSRC, the regulator, the sole regulator of securities business in our market. We have Trevor, who is the head of the ECSE, which is the exchange in our market. And we have 3 broker-dealer representatives on this call. And I think these are the key players. And for the individuals on this call to understand what is necessary, how do you go, how do you invest, how do you find out about these investment vehicles, how do you sensitize yourself and learn about what's happening in your jurisdiction is important. And I think this discussion needs to continue. I think we need to have more discussions like this. We need to disrupt and engage, participants. And I think this is a very good way to start. And I'm happy that this is going to continue for an extended period rather than just 1 month. And I think we need to continue the discussion, even as we leave here and move to our work lives. Engage your broker, ask the question, find out about how the market operates, find out about the instruments in the market. And I think once we start to do that, we can now create more activity in the market. We can now grow the market. We can now see ways in which we can create products for our potential investors.
All right, thank you, Cedric. Alana?
I just want to thank everyone for joining in tonight's discussion. It's a discussion worth having. It's a start, and it's one that should continue throughout our region. In school, they teach us about our body and how to use it because we have to live with it, but we have to live with money as well. But they don't spend as much time teaching us about money as probably Christopher Columbus. So just to say that, investment education, investment culture is one that is necessary in our region. We need to have these conversations, as painful as they may seem, as controversial as they may seem. it's necessary, even in terms of starting it in our households with our children. We may not be able to wait on our education system, but we can surely start with our families and friends in terms of just educating ourselves and making use of opportunities that we have available to us. Unlike some of the developed worlds that have many income opportunities to capitalize on different income streams, whether it is additional employment and so, we know our restrictions in our region, either because of lack of opportunity or flexibility in terms of our time. But we do have a market that gives us some potentials and ability to continue to create wealth, So I would really like to see we continue. Persons who have not yet started, try it. They could even start with very simple investments, just start the conversation. And hopefully we can move our people from just mere consumers to one of wealth creation that we can pass on, not just that we enjoy for ourselves, but that we can pass on to other generations, our families, our children, our loved ones. So I just want to wish everyone all the best, as we stay safe in this COVID environment, and that we really use the benefits that are available to us.
Thank you, Alana. And finally, Trevor.
Yes, I just want to say to everybody who's on this call, on this program, that you can be wealthy too. You can be wealthy too. Building wealth takes strategy and focus. But it's not beyond any of us. You have within the Eastern Caribbean Securities Market the wherewithal to build wealth. Build over time an investment strategy that would allow you to take what little you have now and turn it into something that creates for you the opportunity to enjoy your life, to leave a lasting benefit for your generations to come. Use the opportunity well. You have a range of broker-dealers who are able to assist you to do so. On the market, you have a range of instruments that will enable you to invest in a safe manner, but in a way that you are able to maximize the return that you have over and above the other forms of investment that you may be, are exposed to. You have securities that are diversified in terms of sectors, in terms of geographic location, in terms of instrument types, in terms of issuers. You have all of the building blocks through which you can build wealth. Use it. Those of you who are not yet in the market, come into it. Get started. Start now. Thank you.
All right, so I'd like to thank our panelists. I'd like to thank our listeners and our participants this evening. You've been a very engaged and knowledgeable audience, and we do look forward to seeing you on the future events as we mark the celebration of our market. Your observations, your comments, your questions are very pertinent, and we do realize that there's a lot of work that we as market participants have to do, and we are prepared to do so. So these will be my final words tonight, but we aren't quite done yet. We just have one final message from the ECSE. It actually did tie back to a question.
Omar, sorry, I should have said that we will try to capture the questions that we were not able to answer during this discussion and have those responses for you.
Yes, indeed. Indeed, yeah. So as I was saying, we have one final video from the ECSE. And following that, that will be the end of our session. So I bid you a good night, continue to stay safe, and all the best. We look forward to hearing from all of you on the call. I would like the panelists and the admin to stay on after the video. Thank you, everybody.
Want to receive your investment income faster? The ECCSD can send payments directly to your bank or credit union accounts. Just provide us with your account number and rest assured that your payments will go straight to your bank account. Just go to www.ecseonline.com. Click on Investor Center. Then click on Registry Forms. Download the Registry Account Maintenance Form for individuals or institutions. Complete the form and ensure that your bank and account details and contact information are included. Be sure to read the instructions on the second page of the form. Email the completed form with the required documents to payments@ECSEonline.com and you're done. Investing in the future. Visit ECSEonline.com today.